Everyone talks about the S&P 500. Every headline tracks it. Every investor watches it. But what if I told you there's a commodity that's up nearly 40% this year, quietly outperforming the entire stock market? And most investors aren't even paying attention. Let's break it down. While the S&P 500 has delivered solid but moderate gains, one commodity has surged due to supply shocks, geopolitical tensions, and shifting global demand. That commodity is copper. Copper is often called Dr. Copper because it has a PhD in economics. When copper rises sharply, it usually signals strong industrial demand. And in 2026, demand is exploding. Why? First, the global push toward electrification. Electric vehicles use significantly more copper than traditional cars. Charging infrastructure requires massive wiring. Renewable energy projects like solar and wind farms depend heavily on copper. Second, supply constraints. Mining disruptions, stricter environmental regulations, and underinvestment in new mines over the past decade have tightened global supply. When demand rises and supply stays tight, prices move fast. That's exactly what we're seeing. Investors are now rotating into commodities as a hedge against inflation and as a way to diversify away from expensive equity valuations. Unlike stocks, commodities respond directly to physical shortages. They don't rely on earnings reports or price-to-earnings ratios. But here's the important part. Commodities are volatile. A 40% rise can attract momentum traders quickly. If demand slows or global growth weakens, prices can correct sharply. This isn't about chasing hype. It's about understanding where capital is flowing and why. The S&P 500 reflects corporate performance. Commodities reflect real-world supply and demand. Right now, industrial metals are signaling that global infrastructure spending and electrification trends are accelerating. The question investors must ask is simple. Is this the beginning of a longer commodities supercycle, or just a short-term spike driven by tight supply? Smart investors don't ignore signals outside the stock market. Because sometimes, the biggest gains aren't in the index everyone watches. They're in the assets few people are talking about, until it's too late.